Alright guys, good evening. This is Shalom FX. I'm here to show you guys the simple strategy you can use to take out at least $500 to $700 in the S&P index and an instrument. So even if you have a little account, maybe $50, $40, apply top-down analysis to this strategy and you will do to your best and you will grow. So um when you see a flow like this, an upward channel like this, just take out your trend line and map it out. Okay, when you map it out correctly, then wait for that flow to be broken. This flow began here and it was moving, and all of a sudden it got broken here. And again, when once it gets broken, you do not enter at the instance of this flow getting broken. You wait for lower highs. You wait for lower highs. Sorry, you wait for lower highs. Okay, because this is what will show you that this flow has been confirmed as a broken flow, so that you do not fall to that trap of entering into a false breakout. So for people who don't know what is lower highs, this is an example of lower highs. Okay, these are examples of lower highs, points of resistance that are lower than the previous ones. So once the market breaks out and begins to retest upward again, mark this area where the retest started. Once this area is being broken on the return again, that is when you enter. Once it's broken, you press your sell button here and you take the profit all the way down. Okay, so let me show you guys another scenario here. Another scenario here. Okay, so this is also another scenario. Okay, this is another scenario here. So so this market was broken at this point. It was broken at this point. So, and as it breaks, you don't enter immediately. It breaks because of safety, guys, so that you won't enter into a false breaker. So as it breaks, because this one now is a downward move, remember this was an upward move. That was why we have to wait for lower high. So for this one was an upward move, you have to wait for lower high. For this downward move, we have to wait for higher highs. Okay, now this lower highs comes with lower lows, which are the bottoms. Lower lows. Now these higher highs comes with higher lows, which are also the bottoms, because this one is higher than this one and this one is higher than this level. So once the market breaks out, you wait for the market to retest back. Retesting back means after it breaks out, it will be going up, moving upwards. Once it retests like a kind of a corrective wave, you wait for the market to break this where this corrective wave started. So once it begins to travel back and breaks this area, you press your buy button. And remember, you are scalping. So, and as you are doing this, you are taking note of every single candlestick pattern that represents that market is declining. All right, that represent that market is declining. If you're a good student of the chart, you will understand that at this scenario, the market began to range. At this scenario, sorry, I didn't draw it. At this scenario, the market began to range because there is no definite direction of the market here. So you should have taken out yourself on this very present situation, because the market is on a range. So and a range can break from downward or upward. Okay, so this is a very simple strategy you can work on. And for more information and mentorship, you can contact me in the description below. Thanks guys, and happy trading.